And the same thing for the Fed. The Fed would be bankrupt if interest rates went up based on its $8 trillion balance sheet, which is loaded up with longer-term U.S. government bonds that would crash in value were interest rates to rise. So the Fed itself would be insolvent. So the reality is the Fed is caught between a rock and a hard place. There is no way out. There's only a bad choice and a worse choice. If the Fed allows rates to rise to 1%. But if inflation continues to accelerate, which it likely will, real interest rates will actually be falling, even as the Fed is slightly raising nominal interest rates. So they're actually pursuing a more stimulative policy while pretending to tighten. And of course, the Fed continues to print money. It continues to monetize government debt. Not only have they not stopped the presses, they're still cranking them up. They continue to buy U.S. government bonds and mortgage-backed securities. Now, the Fed is saying that they're going to wind that down, but they haven't actually done it yet. So they're continuing to make this inflation problem worse. But here is the bigger problem. The only way the Fed was able to justify these artificially low interest rates and quantitative easing was under the pretense that an absence of inflation gave them the leeway to do that. In fact, they actually had the gall to claim that inflation was too low when it was below 2%, even though had they measured it honestly, it would have been above 2%. But using the rigged data that they had, they were able to point to an inflation rate of 1.5, 1.6, and claim that that wasn't enough, that we needed 2%, that their mandate was 2% CPI, which of course it's not. Their mandate is price stability. So stable prices are prices that are flat. They don't go up. If their mandate was 2% increasing prices every year, then their mandate wouldn't be price stability. It would be prices going up by 2% a year. But they kind of redefined their mandate to a rising cost of living. And then they claimed that the cost of living wasn't rising fast enough. And therefore, they were going to pursue this easy money policy in order to deliver a more substantial annual increase in the cost of living. Now, apart from the pure nonsense of that argument, because too little inflation was not a problem. In fact, any inflation is a problem, and the more you have, the bigger the problem. But now that inflation is triple or more, 2%, there is no way the Fed can justify maintaining the artificially low interest rates, because even if they raise interest rates to 1 or 2%, they're still artificially low. And there's no justification for that if you're going to claim it's because inflation was too low. Now, inflation being too low was never the real reason. That was just the excuse that the Fed gave. The only reason that the Fed kept rates so low was because we had such a gigantic debt bubble that those low interest rates were the only thing keeping us afloat. If interest rates were allowed to normalize, we would have a far worse financial crisis than 2008. We would have all the big banks that we bailed out failing. We'd have a crash in the stock market. We have a crash in the real estate market. And not only would the private sector have difficulty servicing its debts if the Fed were to allow interest rates to go to a natural level, but the United States government would also be in the same predicament, maybe even in a worse predicament. The U.S. government would be forced to default on its national debt. We've got a $3 trillion national debt right now, and it's financed at 1%. And it's not financed at 1% with 30-year government bonds. It's financed with 90-day T-bills. The government has to constantly roll over this low-yielding debt in order to keep the financing at 1%. Well, 1% of 30 trillion is 300 billion. Well, what if interest rates went up to 10%, which is half of what they got to in 1980 under Paul Volcker? 10% of 30 trillion is 3 trillion. There's no way the government can come up with an extra $3 trillion each and every year to service the national debt. So the only way to keep the government in the position where it can pretend it's solvent is to keep interest rates artificially low. But the Fed couldn't tell the markets the truth about why it was keeping interest rates low. So it came up with a lie about inflation being too low. Well, what's the new lie going to be? Because now inflation is too high. In fact, inflation is now the number one problem on the public's mind. The public is dealing with sticker shock every time they go to the supermarket, the gas station, and that's only going to get worse. And this is the worst possible problem for the Fed, because there is no way to actually fight inflation without creating a massive financial crisis and putting the U.S. government into insolvency. In fact, Powell himself admitted that we are on a fiscally unsustainable path, but he says that we can handle the debts because interest rates are low. All right, well, what happens if interest rates aren't low? We can't handle the debt. And the same thing for the Fed. The Fed would be bankrupt if interest rates went up based on its $8 trillion balance sheet, which is loaded up with longer-term U.S. government bonds that would crash in value were interest rates to rise. So the Fed itself would be insolvent. So the reality is the Fed is caught between a rock and a hard place. There is no way out. There's only a bad choice and a worse choice. The bad choice is to fight inflation, let interest rates go up, and let everything collapse. The worst choice would be to continue to create inflation to avoid that and postpone the consequences of hyperinflation. But unfortunately, that's likely the choice that they're going to make. And so what do investors need to do based on this new reality? Because even though the Fed is still going to be providing cheap money, it's not going to be cheap enough to sustain the bubble. The air is already coming out of the bubble merely based on the fact that the Fed is talking about tiny rate hikes in the future has already collapsed a lot of the bubble stocks. A lot of these stocks are down 50% or more, and they're going to continue to fall. In the meantime, look around the world as the NASDAQ, as I'm speaking, I think the NASDAQ's down about 14%. I think it's rallying this morning, so maybe 13% this year. S&P was off about 9%. Foreign markets are up. Especially if you look at the value stocks, we're seeing huge rallies in dividend-paying stocks in Europe and Asia, stocks that have been left for dead for years, stocks that were used as a source of funds. People are now piling into those stocks as they liquidate these overpriced assets because you can't go to cash right now. In an inflationary environment like the one we're in now, if you want to get out of overpriced U.S. stocks, companies that don't earn money, that trade on a dream, that have high PEs or no E's at all, and they just, trade on hope and prayer. As people are selling these stocks because the momentum is no longer there, they can't go to cash because inflation is going to destroy the value of their cash. They can't go to bonds because they have the same inflation problem with bonds, only worse because they can't get their cash until the bonds mature. And they could take a huge loss on the bonds if they want to sell prior to maturity, as ultimately long-term interest rates go up. So where do you go when you get out of overpriced U.S. stocks? Well, you got to go into underpriced foreign stocks, which basically allows you to accomplish two things. You get out of U.S. stocks and you get into better valued companies that actually make money right now, not potentially in the future, but that make money right now, making things, selling things, generating earnings, and paying dividends. But you also get out of the U.S. dollar because the dollar is going to collapse when people understand that the Fed has no ability to control inflation. And inflation is going to continue to erode away the value of the dollar. What we've had recently is high inflation numbers have actually caused people to buy the dollar because they expect the Fed to successfully fight off that inflation with high interest rates. And it's the anticipation of those higher real interest rates that have been supporting the dollar. Well, when currency traders realize that even if the Fed raise rates, they won't do it enough to stop inflation, and that real rates are going to be falling even as nominal rates are rising, then the dollar is going to fall through the floor. And we're going to have the worst of both worlds, inflation and recession.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.